Well, Hiren Ved is with us. He's Director and Chief Investment Officer at Alchemy Capital Management. Hiren, good morning. Happy Dhanteras, happy Diwali. Great to have you with us here.
Season's greetings to everybody.
Yeah, I should ask you, how's the traffic? I mean, I got out yesterday.
No,
and
today was very easy.
Yeah?
Yeah,
I think the evenings it gets a
evenings is a little tough. Yeah. I guess
unless people have started the Diwali holiday already.
Diwali kids out of Bombay, in Bombay.
Out of Bombay.
I think people are visiting, and it's just that festive mood, right?
Yeah.
And it's still raining. Yesterday in the evening, it was raining in some parts.
Oh, is it?
Yeah. I mean, how's the market looking, Dhiren? What's the? Actually, let me ask you straight up. क्या लिया? ये अब तो दिवाली है, दिवस है, तो कुछ बताइए.
Well, we were all fully invested, so but I think broadly we've stayed with the same themes that we've been carrying on for many years. But I think incrementally the only thing we've done is added a little bit of autos.
Yeah.
Because I think it looks like that the cycle is now, after a very long time, the cycle is turning. So, combination of interest rate cuts, easy liquidity, GST cuts, finally is getting the mojo back.
But two-wheelers?
Both, two-wheelers, four-wheelers. I think...
Some dealers we were talking to, they were kind of saying that with four-wheelers especially, is that GST boost durable? I mean, or by November, by December, again, you're going to get into that inventory build-up kind of situation. Two-wheelers maybe, because the impact is more.
I think two-wheelers definitely has got off to a very good start. Four-wheelers, at least for now, looks like that things have started to move. I think after a long time, we are seeing, we even read that small cars, which were not doing well, are starting to do well. So clearly at the lower price point, things are beginning to, improve. But I think overall, auto should do okay. Typically the cycle takes a long time to kickstart. Once it kickstarts, it at least lasts for some period of time.
Hiren, good to have you in the studio and to welcome and festive greetings to you, your team and everyone at home as well. Interestingly, you spoke about autos. People will be saying last year wasn't a good year. For you all, it was a very good year. One of the top picks, I think, was Force Motors.
Yeah.
Out of nowhere, that stock is up 100%. And now you're talking about the lower end. But I think the Force Motors play was on premiumization, used across, tourism or various other verticals as well. Any comment out there? Because that's had a great run. The auto index is catching up in 2 months. This one in the last 1 year, I think it's up 150%.
Yeah, I think it was more of a bottom-up pick rather than a pick on auto as such for us. It was a stock which was long forgotten by most investors, They don't talk to anybody, etc. But I think if you look at the kind of products they have, the new Urbania is phenomenal, right? And our dealer checks suggest that there's a lot of demand. Both from tourism, whether it is from the healthcare ambulance sector, and more recently from the GCCs that are being set up, right? So that's a nice little van which carries 10 to 12 people.
I've used it. It's fabulous.
It's fabulous.
Yeah.
I think the other less understood aspect of Force is that they also make engines for BMW and Mercedes.
Yes,
right?
So it's a play.
So that's a great way to play premiumization in the car business, right? So, and then they have a joint venture with Rolls-Royce to make engines for exports. So I think it's a great engineering company. So you could play both premiumization plus, Gurkha, the four-wheeler.
Defense orders also.
Has found some place in defense. So it's a very interesting pick. It was, it was kind of out of the woodworks. Nobody was looking at it. Numbers have improved. So yeah, that's played
Still
out
positive
quite
out there.
Yeah, typically we take a fairly long view on many of these companies. But again, a clear disclosure that we and our clients, we do own Force in our portfolios.
I think you've spoken, when we last spoke to you, you spoke about NetWeb.
Yeah.
I think that's a stock. But this time, just wanted to get your broader thoughts on IT. Are you getting some signs that, the after being unloved, after underperforming so much, do you think the tide is turning? We were just chatting with Bhavin Shah, and he said that, maybe growth can now move from low single digits to mid to high single digits. Plus, you throw in the free cash flow yield, and maybe you can make a case for a 10-12% kind of a return in IT stocks.
Yeah, I think anyway, expectations were very low, right? And I think while absolute growth is nothing great, but compared to expectations, I think things have been better. So whether you look at LTIM numbers, Persistent, for example, has done relatively better. So it looks like that the sector may be bottoming out, right? We still believe the large cap stocks can probably give you late single digit, early teens kind of returns.
Okay.
Right? But yeah, I mean, there is safety, there's cash flow. But it looks like that the sector looks like bottoming out now.
So do you want to quickly tell us the IT stocks, the services plays that you have?
So I think for the longest time, we've owned KPIT.
KPI, spoke about that.
So we continue to own that. We continue to like the company. I think we had a soft patch in the first half of this year and all of last year. But looks like that hopefully this quarter should be the last of the soft quarters, right? And I think things from there should actually bounce back. And the other one is that, we have an exposure to a company called Latent View, which actually is a derivative play of, AI and machine learning. They do a lot of data analytics work. We think which is a precursor. I mean, as AI spending moves from the infrastructure layer to the software application layer, I think a company like Latent should do phenomenally well. But again, we own both these companies, so full disclosure.
KPIT and Latent View.
Yeah.
What's the new thing? Could yeah, I'll leave it at that. I have a few questions, but I'll leave it.
Nothing really new. I mean, I think broadly, as I said, that we had our areas where we're clearly growth investors, so we look to in whichever sector, wherever we think that we have quality companies with above average growth potential over the long run is where we are positioned, right? So we are not necessarily trying to do any stuff which is very contrarian, at least from our point of view.
IPOs, anything interesting, which have come recently listed, some have listed below the issue and then they've gone on to do well, that kind of stuff, anything which comes?
No, I think the last we participated a little bit was in a very small company, but we like it, is a company called Pratik, right?
Okay.
So in the building materials space.
Okay.
We think that's quite interesting. I think LG was very interesting, but it's kind of opened with a
50%.
bang.
Yeah.
So I think many of these companies, I think Urban Company and LG were good IPOs. But I guess there's a lot of optimism right now immediately after listing. So we'll kind of let it simmer for a while. And at some point in time, when we get a good entry point, we'll certainly look at some of those.
All right. Hiren, what about gold? What's the view on gold, first of all? Do you think it's running a little too quick? If you're allocating fresh money, what would be the split, between gold as well as equity as of now? And do you think there's another way of playing gold, maybe the financiers or the likes? I'm not sure if you want to give us a view out there.
So, again, I'm not an expert on precious metals, right? But I think gold's done phenomenally well. I mean, we all have discussed there are several reasons, geopolitical,
Central bank.
So on and so, central banks buying. I think the way we've played the precious metals and commodities is by investing in MCX.
Oh, okay.
I think for us that was a more interesting way of...
In a very profitable way.
and a very profitable way. It's a platform, an exchange is like once your fixed costs are done, as volumes grow, everything flows to the bottom line.
Yeah, I think the MCX rally really started a couple of years back when they introduced options, right? I mean,
correct.
That's the...
So I think until recently and even today, like a lot of the volumes were all futures.
Correct.
And it's really when options started is when the volume started to improve dramatically, right? And today you have the three most traded commodities where they are a clear market leader, right? Crude oil, gold, and silver. I think there are a lot of interesting products that they are planning to launch. Like if in today's day and age, if they can launch a 1 kg silver contract, I think that would be a big hit, right? So there are a lot of products which are at the approval stage. I think as and when they get approvals, I think we should see a fantastic.
And unlike
hit in volume.
stock exchanges, NSE, BSE, MCX is no second in that sense so far, right? I mean, no real.
Very difficult, once you build a leadership position.
Yeah.
I mean, NCDX tried a lot, but they just couldn't do anything. I think MCX has now created that ecosystem. Very difficult to disrupt an ecosystem like that once you have buyers and sellers on both sides, right?
What about capital market players? Everyone's talking about us having this long runway. Stocks ran ahead of themselves. Some of them cooled off. Interested in that theme? A few of these themes I wanted to ask you about. Capital market plays, EMS as a space, and maybe the platform themes. Among the three, since all of them
We like all three of them.
All three of them, okay.
Yeah,
You want to name a couple of stocks, will be great. Let's go for it here. It's Diwali.
No, I think I think in capital markets, as I said, we own exchange.
Yeah.
Clearly MCX is a great play there. We do own some asset managers and wealth managers, right? So we like the entire theme. We do believe that there is a structural long-term play. And that's also led to valuations getting re-rated in that area. So, our sense is that we like the business models because all of them have great operating leverage. So whether it's a asset manager, wealth manager, or an exchange.
They'll do well.
Right. So I think they will do well. So we have spread our exposure across all three. Right. You mentioned platforms.
Yes.
Clearly, I mean, I think you have to be selective there, but we do have exposure to Paytm and Eternal, right? I think those are the two platforms that have demonstrated that they can not only scale but also achieve profitability.
Yes.
Right. But I think they're still, they're still on their way to achieving greater profitability. I think they have to strike a balance between growth and profitability. So I guess if you want dominance, then you have to focus on growth first, and eventually I think profitability will also come in.
All right. And EMS?
Again, it's a sector we like. Obviously, valuations are quite challenging now. And it's a sector we've been owning for quite a while now. It's not now. I think it's been a couple of years since we've been having an exposure there.
Okay.
Again, we have the whole range there. We have an exposure to Dixon. We have an exposure to, to Keynes, as well as recently, we do have exposure to some other names as well, like Sirma.
Okay. All right, Hiren. Good to have you in the studio. Thanks a lot for coming down.
Thank you.
And giving us a few ideas, few themes as well. Wishing you, family, team, all of them a very, very happy Diwali. And we look forward to catch up rather soon.
Same to all of you and to the viewers of CNBC-TV18.
Thank you. Thank you very much for joining in, getting back.